Yes, people, a very, very happy afternoon to all of you. Loudly tell me. Very good, very good, very good. So, guys, we're going to again start with a brand new topic today, which is chapter number 3 of your ICA module, which talks about the applicability of the accounting standards. Applicability of the accounting standards. The entire theory of this chapter is homework. So then what will you do? I will do same thing from my notes, which is nothing but a summarized version of what is given in textbook. To make your life easy is what you would think. But this for me to make my class more simplified, I have prepared these notes. So this topic talks about applicability of the accounting standards. In my discussion, accounting standard here means both Ind AS and the normal accounting standard. Whereas here when they say applicability of accounting standards, they're only talking about normal accounting standards, not about Ind AS. But still I'm going to teach you the applicability of the Ind AS. Why? There's a big reason behind it. If I don't tell you what is the applicability of Ind AS, you will end up doing a wrong answer. Okay, so I'll give you a justification that why I'm going to teach you the application of the Ind AS as well. So here when I say applicability of accounting standard, I'm talking about both normal accounting standards as well as Ind AS. Now, first we'll be discussing about companies. In the previous chapter, chapter 1, we discussed that normal accounting standards is being prepared by whom? ASB of ICAI. They will recommend this to ICAI. ICAI will notify. Whatever ICAI is notifying it or whatever ICAI is approving it, that is becoming applicable on the non-corporates. But for corporates, notification of ICAI is not sufficient. You have to get notification from or approval from one more authority, which is Government of India. More specifically, Ministry of Corporate Affairs. Only when MCA notifies, then that standard is applicable on the companies. Yes or no, Nishin? And MCA does this in consultation with NAFRA. MCA does this in consultation with NAFRA. So now, we are talking about the applicability of the accounting standard on the companies. I'm not talking about the non-companies. For non-companies, I have a separate document. I'm talking now about companies. Which companies? Those companies engaged in commercial, industrial, and business activities. Commercial, business, and industrial activities. Application of accounting standard issued by ICAI, notified by MCA, and then we are discussing application of Ind AS as well. Okay. Now, please tell me, accounting standard that has been notified by MCA means which accounting standard? Normal accounting standard. Where do you find that notification? Where do you have to go and refer to? Companies Accounting Standard Rule 2021. Before 2021, we had 2026. What I said? 2006. Sorry, I said 26. Sorry, 2006. So earlier we had something called as Companies Accounting Standard Rule 2006, which got later amended to Companies Accounting Standard Rule 2021. So the accounting standard, which normal accounting standard, which is applicable on the companies, is being notified under Companies Accounting Standard Rule 2021. Now, this accounting standard, we have not blindly applied on all the companies. They have bifurcated the company into two categories. They have bifurcated. They means who? MCA bifurcated the companies under two categories. One, we call this as, in a normal language, we call this as big companies. And second is small and medium companies. Small and medium companies, shortly and sweetly, is called as SMCs. Any company which is not SMC is big company, but technically we can't call that big company. We should call them non-SMCs. So if you take your ICA module, if you read the theory, they've never used the word big companies anywhere. They've used the word SMC or non-SMCs. Big companies only for our understanding. Because when I say non-SMCs, you don't understand what they mean. But when I say big company means what do you think? This company is very huge. In what aspect it is huge, we'll discuss. But you can relate that these aspects are belonging to big companies. Am I loud and clear? Yes, sir. So the Companies Accounting Standard Rule 2021, in which the normal accounting standards are notified, has said that this AS will be applicable on companies in two manners. One, if you're not SMCs, is one type of application. If you're coming under SMCs, your applications will be certainly modified. They are having some deviations in that. What deviations we are yet to discuss. Whereas there are certain companies who can never follow normal accounting standards. They have to follow only Ind AS, and we call them we call them as super big companies. Super big companies. Super big companies, and small and medium companies. Super big, medium, small. Super big, medium, small. Medium and small SMCs. Then we have big companies, super big companies. Super big companies have to only follow Ind AS. And their Ind AS is notified where? Companies Indian ES Rule 2015. Correct? No, in 2015 only, we made it compulsory on all the companies. Why in 2014? Our FM back then, who was it? Arun Jaitley, sir. Late Shri Arun Jaitley. In the budget, after the new government was formed in the month of July, he said that now you have to implement AS, there is no choice. So there's a heavy compulsion that came from the government, and we acted immediately. So within a span of few months, we came out with companies Indian Accounting Standard Rule 2015, which is applicable on super big companies. Why do I say super big companies? So first, let me discuss the applicability of the Ind AS on which type of companies. Then we'll come back to the normal accounting standard applicability. Super big companies are who? These are those companies whose securities here means what? Shares. Not just shares. Even the bonds, debentures could be listed. So securities has got a huge definition. I'm sure you have studied this in law. It's a huge, big meaning of securities. In that, commonly, we call securities as what? Share is one type of security. Debenture is one type of security. Bond is one type of security. So any companies whose shares, bonds, debentures are listed, which is listed company basically. Can you give me an example of listed company? Reliance Limited, Tata Group companies, Infosys, all these are listed companies. These are called as super big companies. They have to follow only Ind AS. They have to only follow Ind AS. Or they are in the process of listing. Can you give me one example, latest example of which company is about to get listed? Milky Mist. Milky Mist is about
Oswald Pumps.
Yes, Kaushik?
Oswald Pumps.
Oswald?
Pumps.
Oswald Pumps. Another example. These two companies, they are telling that it is in the process of listing, which means Milky Mist, they are going to list it next year. So which means that up to 31st March 24, they will follow. Yes, from next year onwards, when they are doing, they have to follow now Ind AS. So any company who's in the process of listing, they have to start now following Ind AS. They have to start following Ind AS. So any company which is already listed or in the process of listing, the listing process begin, they have to now start following the Ind AS. In process company, listing in process, they have to follow from AS to Ind AS. Listed company, by default, since listing, they're following Ind AS only. So Ind AS is applicable on which company? Listed company or in the process of being listed. Listed company means what type of company? Public company. Public companies of two types: listed, unlisted. So we are talking about listed. Listed means what? Listed public companies. Or in the process of listed public companies. So public company which is in process of listing. So first two line is talking about that. Okay. Disclaimer, note. All the listed companies other than banking and insurance company are yet to be notified for applicability of Ind AS. Can you give me an example of banking company? Axis Bank, HDFC Bank, ICICI Bank, SBI, all these are called as companies. All these are called as companies. But despite being listed companies, all these are listed companies. All these are listed companies. Despite being listed, they cannot follow Ind AS. They are not supposed to follow Ind AS. Who is preventing them to follow Ind AS? Banking companies are regulated by RBI. Insurance companies are regulated by IRDA. So you have to prepare, the banking companies and the insurance company has to prepare the financial statement as per their regulations. We have something called as Banking Regulation Act, Insurance Regulation Act, which has been laid down by RBI and IRDA. So that you have to follow. Though we are trying, we means who? MCA is trying hard to convince RBI and IRDA for following Ind AS, but still they couldn't be successful in this regard. So they are yet to be notified. That is, they are notified, but these people are yet to be coming into it, which means RBI and IRDA is still not allowing the banking companies and insurance companies to follow or adopt Ind AS. But apart from these two companies, apart from banking companies, apart from insurance companies, every other companies which is listed or in process of listing will have to follow Ind AS, Ind AS, Ind AS. Any problem here? This note I'll come and discuss in a while. So if you are a listed company, compulsory you have to follow Ind AS, or they have given you second option. They have given you second option. Or based on the net worth, we'll decide whether you're a super big company or a big company or a SMC. So we have super big company, we have big company, we have SMC. If you're a super big company, Ind AS. If you're a big company, AS with no exemption. If you're a small medium company, AS with exemptions. AS with exemption. What exemptions we are to discuss? So how do you classify a company as super big company or a big company or SMC? Based on their net worth and turnover. Based on their net worth and turnover. Companies other than the above company. Above what is covered? In point number, which is what is covered? Listed are covered. So what is not covered? Unlisted company and private company. Unlisted company and private company are not covered above, and NBFCs. NBFC, full form. Non-banking financial corporations. NBFC in the 2016-17 period, in the phase 1, they said that whoever has got a net worth of 500 crores and above will have to follow Ind AS. That is 500 crore and above. If your net worth is, follow Ind AS. Who will not follow? Whose net worth is below 500 crores? Banking company, finance company, NBFC, no Ind AS. Later, NBFC was compulsory made in phase 2. They compelled NBFC also to follow Ind AS. When your net worth is 250 crore or more. I didn't say more than 250 crore. I said 250 crore and more. Your net worth should be more than 250 crore or equal to 250 crores. So now, which financial year went by? 24-25. 31st March 25. If your net worth is 250 crores and above, in the current year onwards, which is 1/4/25 onwards, you have to start applying Ind AS. What is the criteria here? Net worth is the criteria, not the turnover. For Ind AS, the criteria is net worth. For super big companies, criteria is net worth. Whereas for big company and SMC, it is turnover. I'm focusing on first super big companies. What to follow? Ind AS. Now, KVA Limited. What company it is? Public company. Now I'm listed. But my net worth is 100 crores. I'm listed. Net worth is 100 crores. Ind AS or no Ind AS? Now, those who are saying no Ind AS, you have to see here, the word is or. You either see listed status, you see the status of listing, or you will see net worth. When I am saying I'm listed, don't look into net worth. Listed na, right from 1 rupee of net worth, you have to compulsory do Ind AS. Therefore, the point I put here, note, no need to check net worth if these are listed companies. So I said I'm KVA Limited, public company, listed. Net worth is how much? 100 crores. 100% have to follow Ind AS. Any problem? Online people, any problem?
No, sir.
Everybody
No, sir.
respond. KVA Limited, not listed, unlisted. Net worth 100 crores. Ind AS not required. Net worth 250 crores. 250 crores and above. Means if I touch 250 crores, I have to follow Ind AS. 260 crores. 251 crores required Ind AS. Any problem? I'm a private limited company. Net worth 300 crores. Ind AS. What did they say here? Companies other than the above. In above, what is covered? Listed public company is covered. What is not covered? Unlisted public company, private company is not covered. So that will be covered where in point number 2, where I will cover them inside Ind AS provided the net worth is 250 crores and above. Net worth is nothing but shareholders' funds. Now, in exam, will they ask you question based on Ind AS? Will they ask you question based on Ind AS? The answer is no. So therefore, there is no need to calculate the shareholders funds. This is there in your CA final level. Sir, if this is not there in syllabus, why are you teaching? Why? Because they gave one statement in the textbook. If I don't teach you the applicability of Ind AS, an Ind AS following company, you will by mistakenly declare that as big company. A company which is supposed to follow Ind AS, you will declare that as big company if I do not tell this point to you. So please pay full attention. There's a language game that has been played with you. Please understand. Please understand. Criteria for a company to be classified as SMC. If any one of these conditions is satisfied, you are SMC. You are SMC. This small company, medium company. What is not SMC? Company not falling in above criteria are non-SMCs. Which means if anything is not falling in the above criteria, they are non-SMCs. If I tell you these norms, in these norms, listed company is not there. So if listed company is not covered here, as per you, listed company will be covered where? In non-SMCs. But listed company is not coming under non-SMCs. Only because of this line, I had to go and teach you the applicability of Ind AS. Give me 1 hour. After this, I'll come back. Once I complete SMC, non-SMCs, I'll come back and tell you what this line is or how disastrous this line could be if I don't teach you what is applicability of Ind AS. Now, companies other than the above, which is unlisted public company, private company, and NBFCs, non-banking financial corporations, whose net worth is more than or equal to 250 crore as on 31st March of previous year, will follow Ind AS from the current year. So current year financial is what date? 1/4/25. So previous day is what? 31st March 25. In previous year, if net worth is 250 crores and above, you have to follow Ind AS in current year 1/4/25. Any problem? Or if you are a holding company or a subsidiary company, or which company? That company which is following Ind AS. For example, KVA Limited, listed company. KVA Limited, listed company. What applicability? Ind AS. Now, KVA Limited is having a company called as FFLA Limited. This could either be a holding of KVA or it could be a subsidiary of KVA. Holding means what? FFL is the parent company, KVA is the subsidiary company. FFLA parent. Parent means holding. Parent will hold you. So you come under parent. So FFLA could either be holding or it could be subsidiary. Now, if FFLA is the holding company of KVA or is the subsidiary of KVA, then FFLA also should follow Ind AS. Correct? In that scenario, you will not check whether FFLA is listed or not. Listing criteria will not check. Net worth criteria also will not check. Even though FFLA is not listed, even though the net worth is 100 crore, still FFLA has to follow Ind AS. Why? Because I have to consolidate both the financial statement. We'll be studying a topic called as consolidation of the financial statement. So if your KVA Limited is preparing, FS as per Ind AS and FFLA as per accounting standard, can I compare? Can I consolidate? Not possible. That is the logic behind this inclusions. Okay, not okay? Everybody? Yes, sir. Online people, okay, not okay?
Okay, sir.
Okay, sir.
XYZ Limited. XYZ Limited. Net worth 300 crore. 300 crore. Ind AS. ABC Limited. Holding company or subsidiary company of XYZ Limited. Net worth 100 crore only, less than 250 crores. 100% Indians. Any problem? No problem. Example is Reliance Limited. Applicability of AS. Have to apply all Ind AS mandatorily, and there is no exemptions or relaxations. Every single Ind AS means presentation, disclosure, every single minute of the minute points you have to disclose in your financial statements. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Now,
Sir, I have a doubt in third point, sir.
yes, boss.
Sir, the previous year, the turnover was 250 crore, more than 250 crore, sir.
No, wait.
What
I'm
if-
telling you, don't get into any scenarios. Why? Because I've already prepared a lot of scenarios for all of you. I have multiple questions for it. So when I come, I finish all my questions. Then if you still have doubt, ask me.
Okay, sir.
As of now, note it down and keep it to yourself. I'll ask you that time you ask me. Shh. People. Okay, not okay. So please tell me, for a company to follow or get into Ind AS, how many entry routes are there? How many entry routes to become Ind AS company? 3 routes. One is, if you're listed company, get into Ind AS. If you're in process of getting listed, get into Ind AS. Second, you're not listed, but your net worth is 250 crores and above. Then you'll come into Ind AS. This is gate number 2. Gate number 3. If you're a holding company or a subsidiary company, or which company? That company which is falling Ind AS. Even though as per the listing criteria and as per the net worth criteria, it is not applicable. But since you are a holding company of that company which is applicable on which is applicability or having the applicability of Ind AS, by that virtue, you have to follow Ind AS. Only 3 criteria is mentioned for you to apply Ind AS. Now let's try to understand the criteria on the companies to be applied for applying accounting standards. So here's something called as Companies Accounting Standard Rule 2021. Which company will be called as big company or non-SMC company? And which will be called as SMC? First, let's talk about SMC. Because in your textbook, what they have defined? SMC has been defined. SMC has been defined. Anything which is not SMC is a non-SMCs. That's what your book says. Now, SMCs means what? Small, medium companies. Companies whose securities are not listed or not in process of listing, which is nothing but unlisted companies. Private companies, unlisted. Public companies, unlisted. We're talking about that. We're not talking about listing companies. So basically, they're talking about the unlisted companies. SMCs means those company whose equity, that is debt securities, are not listed or not in process of listing any stock exchange, whether in India or outside India. When I talk about listing, means not listing only India. Listing also we're talking about outside India. Second point, or companies which are not bank, not financial institutions, not insurance company. Companies which are not bank, not financial institutions, and not insurance company. Which means if I'm a bank, am I an SMC? No, I'll be an non-SMC. I'll be a non-SMC. I'll be a big company. If you're a bank, are you SMC? No. If you're not SMC, either you'll be non-SMC or you'll be super big companies. Super big company not possible because India is very clearly said that we are excluding bank and insurance company. So bank is kicked out of SMC. Bank is kicked out of super big companies. So what is the only option available? Big companies, which is non-SMCs. Same for financial institutions and insurance company. But financial institution, what happened? SMC, you are kicked out. SMC, you are kicked out, which means you can either become a big company or a super big company. You can be either big company or super big company. So if you are a financial institutions means what? NBFC. If you're NBFC, 2 criteria I'll check. If your net worth is 250 crore and above, you're by default super big company. What do you have to follow? Ind AS. If your net worth is less than 250 crores, no other option, because SMC are kicked out. Super big company or not, because your net worth is 250 crores and less. You're less than 250 crores. So only option available is big company, which is non-SMC. Are you able to process this in mind? I'll be repeating a number of times, so no problem. Or companies whose turnover, now in the normal accounting standard, they're not giving net worth as a base. What are they giving base? Turnover. Because our Indian people, if you say net worth, or net worth, oh, what is net worth? Turnover, sales, turnover, we can understand easily. Turnover is our local language. Net worth, foreign language. The word net worth is coming from where? IFRS. What is Ind AS? Converged into IFRS. Ind AS is converged into IFRS. So net worth is coming from where? IFRS. Heavy language. Net worth. Here, chiller fellow. Turnover part. What is turnover? Sales. Which sales? Net sales. Sales minus sales return is my net sales. That is called as turnover. In turnover, do we include other income? No. Here, whenever we talk about turnover limit, it is excluding other income. Note also I gave you. Turnover mentioned above is always considered excluding other income and is net sales, means sales minus sales return. You will not take gross sales. For turnover, always will take net sales, net of returns. Now, companies whose turnover, companies, if you're a company, which company? Private company. Public company, but unlisted, yes. Unlisted public company. How will I decide for you standard is applicable or not? I will check your turnover. If your turnover is 0 to 250 crore, means what? Forget 0. 1 rupee up to 250, up to 250 means 0, not 0. 1 to 250 crores. 1 rupee up to equal to 250 crores. Then for you, accounting standard is applicable. Accounting standard is applicable. When I say accounting standard is applicable, it doesn't mean that all accounting standards are applicable. It doesn't mean that all accounting standards are applicable. SMC means what? Small and medium. Kutti Papa. Can you ask him to follow all 20 accounting standards? At home, if you have an elder brother, younger brother, who will get a lot of chellam? Lot of exemptions and relaxations. At home, you have a lot of rules and regulations created by your parents. On the elder son and daughter, heavy restrictions. But for the younger one, there is relaxations. Because younger one cannot tolerate so much of rules and regulations. So we have given what? Exemptions to them. So don't go back to your own life struggles. Come back. Now understand what is exemption. Accounting standard 3, cash flow statement. AS 17, segment reporting. AS 20, earning per share. Fully exempt. Which means if you are an SMC, no need to prepare AS 3. No need to prepare AS 17. No need to follow AS 20. Full exemption. Which means for you, AS 3, 17, 20 is omitted. How during COVID, 50% portion were deleted, omitted. Like that, 3, 17, 20 is omitted and deleted. Sorry? Wonderful. That's why we're sitting here. Partial exemption. Partial exemption means what? AS 15, 100% not applicable. Some extent it is applicable. What is applicable and discuss in respective standards. Okay, well. Then disclosure exemption means what? For you, 19, 28, 29 is applicable. In that, what is not required to be shown? Disclosures no need to show. Other thing you follow. Disclosures don't give. Because for you, it is too much to give. For you, this disclosure will be too much. For a first standard boy, if I give 10th standard ka algebra question, poor fellow. Maths is there, but limited maths is there. Numbers, addition, subtraction, multiplication, division, that much only. Disclosure is what? Algebra. What is that? AMGM, arithmetic progression, geometric progression. AMGM is not there. Disclosure not required. Okay, not okay. Hari, nice smile, man. Nice smile you got. அப்படி உருண்டு உட்கார்ந்து எனக்கு ஒரு மாதிரியா இருக்குல்ல நான் கிளாஸ் உருண்டு எடுத்தா நல்லா இருக்குமா நைஸ் ஸ்மைல் event based exemption means what? Event based exemption. This is not fully exempted. If these situation triggers, then you have to follow this AS, otherwise not required. What is 21, 23, 27, 25? We'll discuss when the right time comes. I'm telling, if any of these AS is getting triggered, why? Because that event happened, then you have to do it, otherwise not required. One example, 21, 23, 27 talks about consolidation. So if you are having multiple companies, then to combine the financial statement, that time you follow 21, 23, 23 and 27. Otherwise, for a single company, no need 20, 21, 23, 27. For single company, what consolidation will do? Consolidation means what? Merging of the financial statement. FFLA, KVA's balance sheet, merge. That is called as consolidation. FFLA balance sheet, KVA balance sheet, both are mine. Combined, that is consolidation. If I have only KVA, FFLA is not there, for me consolidation is not applicable, no, boss. That is called as event-based exemption. Event-based exemption means if the event triggers, then you follow full AS. Otherwise, not required. So this is full exemption. This is full exemption. This is full exemption. But event comes, fully have to follow. Event there, fully follow. Event not there, fully exemption. Okay. So I call this as event-based exemption. Whereas these two are partial exemptions. Partial exemptions. Any problem? Tell me, any problem? No. Now, please guess, if SMC has got this exemption, then what will happen on the big companies? Big companies, elder brother. No exemptions. Every year they have to follow. So if you're a big company, you have to comply with all the AS 1 to 29, except 6 and 8. Why? Because 6 and 8 are deleted. 6 and 8 are deleted. So by default, 27 AS you have to follow, and there is no exemptions at all. So is this applicable to my syllabus? 100%. Yes. Okay, wa? So if you're a big brother, big elder sister, that is elder brother, elder sister, is there any exemption and relaxation for you? No. All 27 accounting standard you have to follow with no relaxation howsoever at all. But if you are younger brother or younger sister, you also have to follow rules. But for you, there is some relaxation. What relaxation? One is called as full relaxation. Means what? Full exemption. Full exemption on which standard? AS 3, 17, 20. Do we need to buy hard? 100% yes. You have questions based on this. It is there in your textbook also. So what is fully exempt? 3, 17, 20. Partial exemption. AS 15. Disclosure exemption. 19, 28, 29. Event-based exemption. 21, 23, 27, 25. If you try to buy heart, you'll forget it. If you try to buy heart, you'll forget it. Once you know all the accounting standards, automatically your brain will know how to remember all of these points. So don't try to buy heart. Initially, you might not get a flow of it to remember. For that, initially you have to buy heart, no doubt. I'm telling you, gradually when you do other accounting standards, you will get to know that why exemption is coming here. If you know the logic, you will remember why exemption. So when I come to the respective accounting standards, I'll tell you why. Okay, not okay. Now, no, small company will not complete it. Who are small company? Should not be listed. Should be unlisted company. Companies to be unlisted. So now, they could have very well given the better language. Instead of giving this entire drama, unlisted company, one line they could have given. They didn't give. I'm giving. Accept it. Unlisted company. For unlisted company, you'll come under this criteria. But with this, what will you check? Your turnover and net worth needs to be checked. Turnover means what? Net sales. Net sales. Other than or excluding other income. 1 rupee to 250 crores. 1 to 250. You will come under SMC. More than 250, non-SMC. Companies whose turnover is more than 250, more than 250 crore, you will become big company. 1 rupee to 250 crore, small company. More than 250 crore, you are a big company. But once you become a big company, without forgetting, check one more criteria: net worth or listing status. Because from there, you might convert yourself to super big company. So you have to keep on checking all the terms then and there. So at the end of the year, when you check, you will not just check the turnover, you also need to check the net worth. Or companies whose debt means what? Borrowing. Borrowing means including public deposit, any kind of borrowing, all the borrowing put together. Even if you're borrowing 1 rupee up to 50 rupees, means 50 crore rupees. 1 to 50 crore. If your borrowing is 1 rupee to 50 crore, then you have to follow AS with exemptions. You are called as a SMC. The only difference is what you know. This borrowing you will not see on the last day of the financial year. You will see at any time during the previous year. At any time during the previous year. Whereas turnover you can't see at any time during the previous year. Why? Because turnover every day will increase only. So what is the ideal thing to see? At the last day of the year, what is turnover that you will see? Borrowing is not like that. Borrowing something, what happens? Here you have 60 crore. Last day I repaid 60 crore. Borrowing is 0. So I'll be smart. No, what I'll do? I'll do borrowing 60 crore in middle of the year. Just because I should not come in big company, at the end of the year, what am I doing? Repaying 60 crore on 1st April, again I get 60 crore. Why? Because I want to come under SMC. That cheating we will do. That cheating will do. So what did the law say? Law said that ASB said that nothing doing at any time during the year. Any time during the year. If I see you getting 1 rupee to 50 crore, 1 rupee to 50 crore, you are SMC. More than 50 crore, 60 crore you have got, 51 crore you have got, 50 crore and 1 rupee you have got, you are a non-SMCs. So, companies whose debt more than 50 crores at any time during the year, more than 50 crore, big company, up to 50 crore, SMC, more than 50 crore, more than 50 crore, more than 50 crore, non-SMC, up to 50 crore, SMC. Any problem? So now, how many conditions I've discussed so far for SMC? So far, 4 conditions. First condition is, if you are an unlisted company, you are a SMC. Second, I will check. I'm excluding some companies. Even though I'm saying unlisted company, some unlisted company I should exclude. Who? Banking company, insurance company, NBFCs, financial institutions, FIs. Here, they can be company. They can be other than company. Everything has been excluded. So bank, insurance company and FIs can never ever be considered as SMCs. They can never be considered as SMCs because their responsibility is huge. Bankers' responsibility is huge. We can't give them any relaxations. You can't give relaxations to banking company, insurance company, and FIs because they're playing with somebody's money. And the person who is playing with somebody's money, his disclosure norms to be very stringent. So he has to follow all the AS. Third, turnover, not 0. 1 rupee to 250 crore. Turnover 1 rupee to 250 crore. Or debt or borrowing 1 rupee to 50 crore. Difference is what? This is on last day of previous financial year. This is at any time during previous financial year. Any problem? 4 conditions. Now, 5th one. Or if the company is a holding company or the subsidiary company of SMC. Sorry, this is done in negative manner, which is not the holding or the subsidiary company of non-SMC and listed company. Which means if this company, let's say KVA Limited, I am a holding company or a subsidiary company of a super big company, then I become super big company. I am KVA Limited, holding or subsidiary company of big company, then I become big company. So they have given this in negative manner. They given negative manner. You should not be the holding or the subsidiary of big company and super big company. Big company and super big company. Big company and super big holding and subsidiary should not be there. So by default, you are SMC, provided you are not bank, provided you are not insurance company, provided you are not financial institution, provided your turnover is not more than 250 crores, debt not more than 50 crores. Obviously, when you're saying you are a non-SMC means what? Turnover is less than 250 crores, borrowing is less than 50 crores. Automatically, it is what it means. Am I clear? One more example I'll give you. KVA Limited, listed company. FFLA Limited, unlisted. This is subsidiary of KVA. So KVA what application? KVA, listed company. Ind AS, super big company. FFLA Limited, unlisted. Sir, no. Unlisted company. What did you say? Sir, unlisted company, sir. Come here. All unlisted company, SMC. Not possible. Even though it is unlisted, but it's subsidiary of KVA. And KVA is applying Ind AS. So KVA is super big company. FFLA is the subsidiary of super big company. So therefore, even FFLA has to follow Ind AS. Okay. KVA Limited, not listed. KVA Limited, not listed. Not listed. Turnover, 500 crore. And FFLA is subsidiary of KVA Limited. Now tell. For KVA Limited, not listed. Turnover more than 50 crores. Not Ind AS. It is accounting standard. I said turnover. I didn't say net worth. Turnover 500 crores, which is more than 250 crores. So I have to follow AS, full AS with no exemptions. Full AS with no exemptions. Full AS. Because KVA Limited is not coming under super big company. KVA is not listed. When does KVA not listed come under super big company? When net worth is more than 250 crores. Here I didn't speak about net worth. So no net worth. If net worth is not given, I presume it is less than 250 crores. So I'm focusing only on the turnover. Turnover more than 250 crores. So KVA is super big or big? Big. So they have to follow AS, full AS, no exemptions. FFLA, unlisted, but subsidiary of KVA. If KVA is big company, FFLA, though turnover less, though debt and borrowing less, still have to follow AS, donkey follow, Ind AS, how it will come. For KVA, if I'm saying AS is applicable, this also AS, full AS, no exemption. Even though SMC it is, but by virtue of being the subsidiary company of the big company, since FFLA is subsidiary of big company, FFLA despite being SMC, why I'm saying this is SMC, turnover 50 crore, borrowing 0. If I go literally, this is SMC. But here I can't classify SMC. Why? Because this is the holding or the subsidiary of that company, which is not a SMC. It is a big company. So if any of my group company is a big company, then my company, small company, even though small company, I'll become a big company. I have to follow big company rules. This will take some time to digest. It's not easy. I took 3 days to digest. How can you digest in 3 hours? Don't ask anything now. I'm telling why, because I have a lot of questions based on this. Once I do all the questions, at the end, you ask me doubt. Now don't open your mouth and ask anything. Everything I covered. Whatever doubts you can ask, what you can think, everything I taught, I created the questions out of it. I have a lot of questions to discuss. So do not ask anything as of now. Any problem? Any problem? Shh. Nama ida papa zoom out like this. Ella unlisted company is not SMC. Again, you have to check the net worth and turnover, everything you have to check. Which relation? Now, once again, I'll just continue this part. Shh, focus. KVA Limited, unlisted company. I should not be the holding or the subsidiary company of big company or super big company. If KVA Limited is a subsidiary or holding of a big company, then KVA Limited will become an automatic big company. If KVA is a holding and subsidiary of super big company, even though I am having less turnover, I'll become a super big company. If the company means KVA Limited falls under the above 1 to 4 criteria, then it is SMC with some exemption in AS. 1 to 4 only I said. 1 to 4 means what? What is the first condition? First condition is unlisted. Second condition is that you should not be bank, not be insurance company, not be financial institution. Third condition is what? Turnover. Fourth condition, borrowing, Purvi. I am talking about 1 to 4. If the company falls under the 1 to 4 criteria, if you're coming within the criteria, you are a SMC with some exemptions in AS. However, if such company means what? KVA Limited, which you thought is SMC, because you're covering in 1, 2, 3, 4. However, if such company, KVA Limited, becomes a holding or the subsidiary company of a non-SMC, then this company KV Limited also become non-SMC. And all AS will be made applicable with no exemptions. So by virtue of 1, 2, 3, 4, you thought KV is SMC. But where did we get stuck? In the fifth condition. Because I was holding on the subsidiary of big company. So if big company, my group company, is following all AS, I also have to follow all AS. Explanation of this only has been given here. So wherever explanation I felt is not clear in the book, I have given the explanation possible everywhere. And if such company, KV Limited, is either the holding or the subsidiary company of listed company, means what? Super big company, who has applying NDS, who's applying NDS, then this company, which company? KV Limited, also has to apply NDS. How is it now? How is it now? I have a lot of examples, don't worry. I'll be discussing. Coming back, same point is being covered in the textbook. Who is SMC? Shh. Whose securities are not listed. So unlisted company, which is not a bank, not a FI, not an insurance company. Same point. Turnover excluding other income does not exceed 250 crore. Should not exceed 250 crore. Can I be up to 250 crore? Yes. So 1 rupee to 250 crores. Borrowing does not exceed 50 crore. Can I be 50 crore? Yes. So 1 rupee to 50 crore. And fourth company, which is not a holding or the subsidiary company of a company which is not a small medium company. Okay, not okay? Okay. Now, what is non-SMC? Company not falling within the definition of SMC are considered non-SMC. Anybody who is not coming under SMC is non-SMC. Correct? Is it true?
No, sir.
Why it is not true? If net worth is more than 250 crore, if it is listed company, what will you do? Boss, you have to follow Ind AS. In exam, if they ask you a question, KVA Limited, turnover, 200 crores. 200 crores. KVA Limited, turnover 200 crores. Listed, I'm putting. Listed, KVA Limited, listed, turnover 200 crores.
Super big company.
200 crores. SMC, no? It has become super big company. See, if I had not told India's applicability, what will you classify that as? SMC or non-SMC? SMC would have classified. No, sorry, non-SMC would have classified. Because, one more time I'm telling. Listen. KVA Limited. First condition, it is listed. Second condition, turnover 200 crores. Turnover 200 crores. So it is SMC. But since it is listed, it is non-SMC. Non-SMC. Correct? It is non-SMC. So which will you follow? SMC or non-SMC? Overall, non-SMC. Is it non-SMC? Not SMC means big company. Listed company cannot follow AS. They have to mandatorily follow Ind AS. What will you write in exam income? Since KV Limited is a listed company, turnover is less than 250 crores. Less than 250 crores, it is not SMC. It is non-SMC income. And you will say all accounting standard will be followed. Donkey fellow, AS is not to be followed. What is to be followed here? Ind AS. So Ind AS applicability is not there in syllabus. But if this question comes, you will give a wrong answer and come. Because what did you think? Anything which is not fitting into SMC condition, for you everything is non-SMC. You means what? The book is telling that. Companies not falling under SMC is non-SMC. There are some companies which will not even come under non-SMCs. Who? Listed company. Who? Net worth more than 250 crores. So they are not non-SMCs. They are super big companies. They are not big companies. They are super big companies. So if I did not tell you the classification of all the three, in exam you will get confused. So if I ask you what is the status of listed company, you will say AS income. AS with no exemption. Whereas for listed company, AS is not applicable. What is applicable? Ind AS is applicable. Online people, okay, not okay?
Okay, sir.
Okay, sir.
Everybody, open your mouth.
Okay, sir.
Okay, sir.
No need to do anything. Everything will be, this PDF will be shared to you. Just try to process the data in your mind. Now, come back. I also try to give you who is big company. Who is big company? Can I do it? Till do revisions, don't worry. Banking and insurance company. Banking company, insurance company, sticked out of super big company. It is not a super big company. And banking and insurance companies kicked out of SMCs also. So where should banking and insurance company go? Non-SMCs. Whether listed or in process of being listed. Or unlisted also. That is covered in the next point. Or banking, insurance, unlisted company. So banking company, insurance company are kicked out of super big company, kicked out of SMC, both listed and unlisted. So where do they come and get the protection from? Big companies, non-SMCs. So banking and insurance company, listed, unlisted, process of listing, everything is non-SMCs. Who else is non-SMCs? Turnover more than 250 crore on the last day of the previous year. I never said equal to. Equal to we mentioned for net worth. Net worth 250 crore or more than that. Equal to or more than. Net worth is equal to or more than. Here equal to is not there. Small made is there. That is 1 to 250. Here it is more than 250. Whereas for net worth it is what? 250 and more. Net worth is 250 and more. Turnover is more than 250. Turnover is more than 250. I'll be able to follow. India's applicability net worth. For net worth, what criteria they said? 250 and above. 250 and above. For turnover, what they said? More than 250. More than 250. So people will get confusion. We'll get a confusion that equal to is applied where and equal to where it is not applied. So I'm telling you, whenever you talk about 250 crore, for net worth it is more than 250. For turnover it is, for net worth it is 250 and more. And for turnover it is more than 250. Companies whose debt is more than 50 crore, more than 50 crores. 1 rupee to 50 crore, small company. More than 50 crore, big company. At any time during the previous year. At any time during the previous year. Any company, let's say KVA Limited, if by chance is a holding company or a subsidiary company of a non-SMC, that is big company. Then KVA Limited also becomes big company. Am I clear? Holding and subsidiary of big company. So let's suppose I am FFLA. KVA big company. KVA Limited big company. KVA Limited big company. FFLA subsidiary. FFLA ka turnover is 100 crore. Small company. But since I am subsidiary of KVA Limited and KVA is big company, since KVA is big company, FFLA also a big company, even though turnover is less. So holding and subsidiary of a non-SMC company will also become a non-SMC company, even though they are SMC as per criteria 1, 2, 3, 4. Okay, not okay. Online people, okay, not okay. Example, Axis Bank. Example, Axis Bank. One example I took. Have to comply with all the A's 1 to 29 except 6 to 8. No exemptions allowed. No exemptions allowed. 6 and 8 are deleted. Scrapped out. It is deleted. So A's 1 to 29 mein 6 and 8 is deleted. Except 6 and 8 doesn't mean that 6 and 8 they should not comply. 6 and 8 is not even there. Why is the question of complying with?
It should be, the sentence should have been have to comply with all 27 accounts.
By English, no exemptions available. Sorry. Come again. NBFC where will come? If NBFC ka turnover more than 250 crore, big company, non-SMCs, less than 250 crore, SMC. So you'll see the same criteria for unlisted company. So NBFC unlisted company, same criteria.
So no, in SMC you said not financial institutions.
Oh, sorry. So FIs will come where? In this only it should come.
Either super big or big.
No, big also. It'll come under big. It'll come under big. By default, should come under big. So here, banking, insurance, and NBFC should come. Yes. Financial company. If your turnover is more than if net worth is more than 250 crore, then NBFC will go under Ind AS. If turnover is less, net worth is less. Net worth is less. Net worth is less. Let's say 50 crore. But net worth is less. See, NBFC, they cannot come under SMCs. For NBFC, SMC is permanently closed. Either you can be a big company or super big company. For you to be super big company, your net worth should be more than 250 crore, 250 crore and above. If it is not there, by default, you are big company. So it comes under non-SMCs. If it is listed, it will go to Ind AS. Anything which is listed will go to Ind AS.
Sir, but from 2016-17, NBFCs are should follow it test.
तो वही तो बोल रहा हूँ भाई, Ind AS तो आ ही जाएगा. But again, title is 250 crore number.
So if NBFC is listed, then it is Ind AS.
Sorry?
NBFC
List any listed except bank and insurance. Any listed company except bank and insurance company is my Ind AS. My Ind AS is following Ind AS. Now, can we start?
Yes, sir.
Full-fledged questions I have. Full questions. Before that, revision is required.
No, sir.
Once revision will do. Okay. Ind AS is applicable on whom? Listed company or in process of listing. In this, who is excluded?
Banking
Excluding
company.
Banking insurance.
bank,
Insurance company.
excluding insurance company. Okay. Second, unlisted company, but net worth, unlisted net worth 250 crore or more. You are a super big company. Yes. Unlisted means what? Public company or private companies. Private companies are not listed, unlisted only. Third one, if you are a company, if you are a holding company or the subsidiary company of that company who is following Ind AS. If your holding company or subsidiary is following Ind AS, you also have to follow Ind AS. Any of your group company, any one of your group company means what? I have two group company. One is FFLA, one is KVA. In any of these two, if any one is Ind AS, other has to do Ind AS. Any problem? No problem. Then let's talk about SMC. SMC first condition. Unlisted company. Second,
Turnover one.
should not be a bank company, financial institutions or
Insurance.
company. Third,
Turnover 1 to
51 up to
250 crores
250 crore
on the last day of
on last day of previous financial year, which is 31st March. Then
debt
rupees 1 to rupees
50 crore at any
your
point of
SMC. Beyond 50 crore, you are non-SMC, big company. This is
at
at
any time.
any time during previous financial year. Fifth one, should not
Year
be
holding of
a holding company or a subsidiary company of non-SMC
non-SMCs
company
and
or super big company.
super big company.
Non-SMCs. Listed or in process of listing, which bank company and insurance company. Not necessary that every banking company or insurance company should be a company. They can be other than company also. So other than companies, so bank entities, insurance entities, they have to, obviously they'll be unlisted. So for them, they will come under non-SMCs. Okay. Third point.
Turnover
more than 250 crores.
250
Equal to I did not put. More than 250 crores. Last day of the financial year. Debt more than 50 crores. Equal to I did not put. More than 50 crores at any time during the previous financial year. This company is either holding company or the subsidiary company of non-SMC, big company. If this company is a holding or subsidiary of non-SMC, then this company also has to follow non-SMC ka rule, even though it is turnover or debt is less than 250 crores or 50 crores. Okay, not okay. X Limited, 200 crore. Either net worth. Turnover 170 crore. Borrowing 60 crore. Status is listed company. Remarks listed company. Listed company. Listed company. When it is listed company, net worth keka kudadu. Turnover keka kudadu. Borrowing keka kudadu. By default it is listed. Super big company. X Limited is the listed company, and hence all Ind AS will be applicable. All Ind AS will be applicable. No need to check net worth. No need to check turnover. Nothing needs to be checked. Can I convert this in PDF? Now, next one. Company Y Limited. Net worth 150 crores. Turnover 50 crores. Borrowing 10 crores. Y Limited is unlisted. It's also a subsidiary of X Limited.
Ind AS.
How Ind AS?
Subsidiary of X Limited.
Even though Y Limited is unlisted, net worth below 250 crore, turnover also less, borrowing also less. But what mistake it did? It is keeping friendship with X Limited. If X Limited is following Ind AS, he also has to follow Ind AS because it is a subsidiary company. So X Limited was a listed company in the previous question to which Ind AS was applied. Since Y Limited is subsidiary of X Limited, Ind AS will be applicable on Y Limited as well. No need to check the net worth. Okay, not okay.
Okay.
Axis Bank Limited, 700 crore. What is it? Net worth. First column is net worth. Turnover 1000 crore. 2000 crore is borrowing. Super big, big or small? Big. Bank will not come under super big. All listed companies or the companies in process of listing except bank and insurance. So bank and insurance companies kicked out of super big company. So they'll go where? Either to non-SMC or SMC. SMC also they went. They are also kicked out. What is available? Non-SMC. Non-SMC. Okay. Net worth 7 crore. Turnover 10 crore. Borrowing 5 crore. Now tell me. Turnover less than 250 crore.
Non-SMC, sir.
Turnover less than 250 crore. Borrowing less than 5 crore. Bank cannot be SMC at all. SMC ka condition is what? If you want to become an SMC, you should not be a bank. This is a bank. This is a bank. And moreover, Axis Bank is listed. Imagine, this is not Axis Bank. XYZ Bank, unlisted. Still it will not come here. Where will it go? Non-SMCs. Axis Bank is listed company. Even though it was not Axis Bank, XYZ Bank, still it is not an SMC. Axis Bank Limited is a listed company. Axis Bank Limited. How do I say it is listed? Though I didn't say it is, Axis Bank is a listed company. Their stocks are listed in stock market. It's a listed company and hence AS is applied on banks subject to further compliance to be done under the Banking Regulations Act. So they have to follow what? AS. They'll come under non-SMCs. But apart from that, they also have to follow banking regulations. Ind AS will not be applicable to the listed unlisted banks. Any problem? Had this not been Axis Bank, had this been even XYZ Bank, still it is a non-SMCs. If you want, I'll include that and give you here. One more question extra. SPJ Bank Limited, okay, right? SPJ Bank Limited, unlisted. Net worth 70 crores, turnover 100 crores, borrowing 40 crores. SPJ Bank Limited is unlisted company and also their turnover and deposit are within the limit of SMC, but still we cannot classify them as SMC because all bank and insurance companies by default are non-SMC company and hence all AS is applied on the bank subject to further compliances to be done under Banking Regulations Act. Any problem? Any problem? This what I wrote is a simple English language just to make you understand, but you can't write this in the exam. In exam, how the presentation needs to be done, that will be discussing in the upcoming sessions. Any problem here? Online people, any problem here?
No, sir.
A Limited, net worth not given, turnover 500 crore, borrowing 100 crore, unlisted company, non-SMC, big company. How? Sir, turnover more than 50 crore. This one condition is more than sufficient. But we have second condition also supporting borrowing debt more than 50 crores. So if any one also satisfied, it is non-SMCs. A Limited will be classified as non-SMCs since the turnover is more than 250 crore, or even if the borrowing was more than 50 crore, if any one condition also satisfied, they'll be big company. Hence, all AS will be applied with no exemptions. No exemptions. Now, let's see how much of you got the concept properly. B Limited, net worth not given. Because for us, India's questions will not come in exams. AS based questions will come. 200 crore, what? Turnover. Borrowing is 40 crore on 31/3/24. Information. It had 50 crore borrowing on 31/3/23 or on 1/4/23 or 1/1/24. I'm coming, wait. Listen. Wait. Show. 30/3/24, which means this financial is 23/24. 31/3/24. Borrowing is 40 crore. 50 crore was borrowing when? 31/3/23 means 1/4/23. Borrowing how much? 50 crore. We also check the borrowing on 1/4/23, 1/1/24. 1/1/24 means somewhere here. 1/1/24, January. Again borrowing 50 crore. At the end, it is 40 crores.
SMC, sir.
Why it is non-SMC, Kanna?
SMC, sir.
For you to classify that as non-SMC should be more than 50 crore. It is exactly 50 crore. When should you classify? On the basis of borrowing. On the basis of borrowing. When do you classify this as non-SMC? Borrowing should be more than 50 crore. 50 crore at 1 rupee, non-SMC. Up to 50 crore, SMC. Turnover, 1 crore to 250 crore. 1 to 250. If it is within that, SMC. Borrowing, 1 crore to 50 crore. Within this 1 to 50, it is SMC. Borrowing time at any time during the previous year. Any time you take 31/23, 1/4/23, 1/1/24, 1 July 24, 1 July 23. Anything you took, anything you take. Everywhere it did not cross 50 crores. Only when the borrowing is more than 50 crores. Debt more than 50 crores. More is more there. More not there. Exactly 50 crores is there. So it is SMC. Saw the trap? How is this trap for all of you? Since turnover is not more than 250 crores and also the borrowing is not exceeding 50 crores at any time during the previous year, therefore B Limited will be classified as SMC. Hence AS will be applied not fully but with applicable exemptions. Now C Limited, Jayesh, net worth not given. Turnover how much? 200 crores. Looking at turnover, it is SMC. But let's see the borrowing. 40 crore on 31/24. Looks like non-SMC, sorry, look like SMC. But it has borrowing 50.1 crore on 1/4/24 or 1/1/24 or 31/7/23, which means any time during the year if you take, the borrowing was more than 50 crores. So this is non-SMC, big company. Turnover wise SMC, but borrowing wise big company, non-SMCs. Turnover is not more than 250 crores, but borrowing is exceeding 50 crore at any time, not at the year end. Borrowing is not seen at the year end. Borrowing is seen all 365 days. All 365 days, see what is the highest borrowing. 1 day to 365 day. What is the highest borrowing? So highest borrowing was 50.1 crore during the previous year. Hence, C Limited will be classified as non-SMC and therefore all AS will be applicable with no exemptions. All the ifs and buts, what you had in mind, everything I'm documenting. FFLA private limited. Net worth not given. 260 lakh in 2024, 52 lakhs. Borrowing 52 lakh during 2024, repaid during this repaid borrowing. Entire borrowing was repaid on 31/24.
More than 250 lakhs.
I knew it. I knew it. You were focusing on 250 lakhs or crores. Oh my God. I did a scam with all of you. I played with you. You focused on 260. Psychology. What game I played here? I didn't use the word crore. I used the word lakhs. 260 lakh. If you convert in crores, how much it is? 2.60 crore it is. What is it now? SMC. 52 lakh. 0.52 crore. So both are within the limit. So don't focus on numbers. The entire thing is very important. As a CA, you have to be vigilant. Each and every letter, word matters. So now FFLA private limited. It's neither a listed public company, nor banking insurance company, nor turnover exceeding 250 crores, nor borrowing is more than 50 crores at any time. Neither this is holding on the subsidiary of a non-SMC or super big company. Neither the holding a subsidiary of super big company. Therefore, FFLA limited, private limited is a SMC where all AS is applicable with applicable exemptions. Whatever relevant exemptions are there, that you leave it, rest all you have to comply with. Non-SMC. Now, போதும் சொல்றத question இருக்கீங்க. Now, KVL limited, private limited. Net worth not given. Turnover, turnover 70 crores. Borrowing 1/4/23, 70 crores. 31 July 23, 100 crores. 30 September 23, 60 crores. 31 January, 10 crores. 31 March, 5 crores. 31 March, 5 crores. End of the year, 5 crores. End of the year turnover, 70 crores. Unlisted company. Unlisted company. Why not SMC? Borrowing is more than 50 crore. Here. At 3 places, your borrowing is more than 50 crores. Hence it is non-SMC. Though turnover is not more than 50 crores. Turnover is just chiller, 70 crores. Though turnover is not more than 50 crores. But borrowing is exceeding 50 crores at various point of time during the year. Not one point, various points. Hence KV Limited will be classified as non-SMC and therefore all A's will be applied with no exemptions. Next, KV Limited, 70 crore. Borrowing 756, 5.
SMC.
Unlisted.
SMC.
Turnover less than 50 crore. Borrowing also up to only 50 is there. What would you say? 1 rupee to 50 crore. SMC. More than 50. Non-SMC. Anywhere 50 crossed. So it is a SMC. Turnover is not more than 50 crores. And borrowing is not exceeding 50 crores at any time. Hence KVA will be applying. KVA Limited is SMC with exemptions. They'll apply all the A's with exemptions. $250 crores turnover. What company you want to know? KVA Limited. KVA Limited. 250 crores. 756, 5.
SMC.
250 crore. Like how borrowing, they say more than 50 crore, turnover also more than 250 crore. Here what I gave, exact 250 crore. So here turnover also not crossing 250, borrowing also not crossing 50. So it is SMC. And more it is unlisted also. Turnover is not more than 250 crore and borrowing is not exceeding 50 crore. Hence KVA is SMC. All A's apply with exemptions. KV Limited, 251 crore.
Non-SMC.
Do I need to check the borrowing?
No, sir.
Turnover more than 250 crores. It is
Non-SMC.
non-SMC. KVA is non-SMC. All A's will apply with no exemptions. How's it? No energy. I'm going. Bye. Next, KVA Limited, an unlisted company whose share capital is rupees 100 crores, reserves and surplus 300 crores as on 31st March 24. It says during the year, its turnover was 400 crores. Identify the application of the standard. Further, KVA Limited has a subsidiary company name FFL Limited. And what will be the application of standards on FFL Limited? How do you say it is not listed? Sir, share capital is 100 crore. Reserves and surplus 300 crore. Both if I add, it becomes net worth. Share capital plus reserves and surplus is net worth, which is how much? 400 crores, which is crossing 250 crores. It's crossing 250 crores. So it is the super big company. So what is applicable? Ind AS. So if KVA is applying Ind AS, its subsidiary FFL also will apply Ind AS. How do you check first step? Check first of all whether this is a company or a non-company. Very clearly the question says that is KVA limited. Limited means what? Company. Because for non-company, there is separate rule. We focus today so far on company only. So check whether company or not. So what is the answer? It's a company. So company means either you apply Ind AS. Ind AS. Notified where? Notified where? 2015, okay. But what is that called as? Companies Indian Accounting Standard. Rules 2015. and you have to check the applicability of AS. You will check at Companies Accounting Standard Rule 2021. So step 1, company or no company? Company. Okay. If it is a company, either it should be super big company or small company. So first I'll check always super big company. If it is not super big company, then small company. When I check the criteria, I have to check the criteria laid down under Companies Indian Accounting Standard Rule 2015 or Companies Accounting Standard Rule 2021. Both I have to check. So first I am checking what? Super big company ka rule. Super big ka rule is what? Listed. Is it listed? Or is it in the process of listing? The question very clearly said it is unlisted company. And nowhere they said that we are in process of listing. So first condition gone. What is second condition of Ind AS? Net worth should be 250 crore and more. 250 crore and more. Turnover more than 250 crore. Net worth is 250 crore and more. Here the net worth is 400 crores. Since net worth is more than 250 crore, KV Limited will apply Ind AS from 1 April 24 onwards. We are checking the net worth turnover on which date? 31st March 24. That is the previous year we check. So in current year 1/4/24 onwards, it is Ind AS applicability. Any problem? Any problem? Up to previous year, net worth was less, turnover was less, everything was less. Hence, KVA last year was big company or SMC. In current year, what happened? Net worth crossed. So from current year onwards, they have to apply Ind AS because now they have gained the status of super big company. Since FFL Limited is the subsidiary of KVA Limited, automatically FFL Limited shall also apply Ind AS. So if any company means FFLA, if it is either the holding or the subsidiary company of the super big company, then this company also becomes automatically super big company. Now, in case in the subsequent year, 25-26, in 24-25 Ind AS, I'm talking about 25-26, subsequent year, if the net worth falls down to 100 crore, still the said company has to apply Ind AS. They cannot go back to AS. So once Ind AS is applied, always Ind AS. You cannot go back. So one more time, sir. 23-24, you were a big company. Sorry. 22-23, big company. So being a big company in 2024 also you followed accounting standard. Still big company. But 31st March 24, we saw the status and you become super big company. So in 24-25, you'll be called as a super big company and Ind AS is applied. Now 25 here, net worth is dropping down to 100. So 25-26, you'll be called as still super big company only. Even though net worth reduces, still once you go to Ind AS, you cannot come back. Only one way. No reversal. Okay, not okay. Next, let's say KVA Limited was listed and they applied Ind AS. KVA Limited first year listed. Later, they said listed company, yo, heavy compliance, I can't do it. So second year, they became unlisted. So first year listed Ind AS. Second year unlisted. Turnover 50 crore. Borrowing 10 crore. So can I go back to accounting standard? No. Once Ind AS applied means Ind AS only. Let's say KVA Limited was listed and then applied Ind AS. And in subsequent year, if KVA Limited becomes unlisted, they still have to apply Ind AS only. So one way only. Once you get into Ind AS, there is no coming back. Once you join Underworld, you can come back. Underworld, Don. Don. Mafia. Oh, Mafia na she'll understand. Oh, I didn't know that. Mafia. Mafia kabhi maaf nahi karta. Once you come inside, you can never go back. Huh? CA, once you come back, you have a choice to go back. Nobody's going to stop you. Choice is yours. If you're going back, will I say tell, I'll kill you, I'll shoot you? No. Underworld Mafia is not like that. You go and tell Underworld Mafia, I have a girlfriend, I have fallen in love, I want to go and live a normal life. What will he do? He'll take a gun and first shoot you. Once you come back, no going outside. I say it's not like that, no. Very gentle heart. You want to do CA? Do CA. Don't want to do CA? Get lost. No problem. If applied earlier, then you have to follow. Even though it is later not subsidy or holding. Once applied means forever you have to apply. But again about Ind AS, there is a lot of more ifs and buts. I'm not going into that. Leave it. Let's now focus only on AS. Now, KVA Private Limited, Lakshita, is a company whose borrowing during the year 23-24 was 52 lakhs. It repays its borrowing on 31st March 24. Its turnover was 260 lakhs during the year. HS, okay. Its turnover was 260 lakhs during the year. The senior finance manager of the company classified the company as non-SMC company, where all the A's were made applicable from 1st April 24 onwards. Is the contention of the senior finance manager correct or incorrect?
Correct.
Which means KVA Private Limited had a finance manager, senior finance manager, who was taking care of the accounts and finance department. He was the person in charge of accounts and finance department. He says that, from whom he studied AS, I don't know. He says that with this data, we are now big company. We are non-SMCs, so we have to follow all AS.
No, sir. SMC.
Which from where he studied, I don't know. But you guys have studied from Prathik, sir. You tell me.
SMC, sir.
You should not look at the word 52 or 260. After 52, what is that? Lakhs. 52 lakh means how much? 0.52 crore. 260 lakh means what? 2.6 crores. So first of all, KVA is a private limited company, means unlisted. Second is neither bank nor insurance company. For you to classify some company as SMC, what is the first condition? You should be unlisted. I am unlisted. Then the second condition, I should not be bank. I'm not bank. I should not be insurance company. I'm not insurance company. I'm not supposed to be financial institution. I'm not a financial institution. Third condition. My turnover should be 1 rupee to 250 crores, which is there. It is 2.6 crore only. My borrowing should be 1 rupee to 50 crore, which is less than that. It is only 0.52 crore. Fourth condition also satisfied. And nowhere they said that this KVA Limited, if KVA Private Limited is the subsidiary of big company or super big company, or KVA Private Limited company is the holding of big company or super big company. Nothing mentioned, which means all the conditions of SMC is being satisfied. Hence, KVA Private Limited is a SMC company. Now, how do you write this answer? As per Companies Accounting Standard Rule 2021, whenever any company qualifies any of the following conditions, any is right, all of the following conditions, any or all, I should not be unlisted company, and கடைசியில் என்னமா அடிப்பீங்க எண்டா ஆரா okay, you're telling that first condition is unlisted or bank. சரி, வெயிட் பண்ணுங்க. Here end or nothing they put. Last one end they have put. Anyways, coming back. As per Companies Accounting Standard Rule 2021, whenever a company qualifies any of the following condition, it is a big. Any one qualified means it is a big and non-SMC. Now correct them. Any one if it is qualifying, others not qualifying means it is a big company or non-SMC. So for you to be SMC, all the condition needs to be satisfied. All the condition needs to be satisfied. So which means first, I should not be unlisted company. Plus, I should not be bank company. Plus, my turnover should be up to 250 crores or less than 250 crores. Plus, my borrowing should be up to 50 crores or less than 50 crores. I should not be the holding or the subsidiary company of a big company or a super big company. Which means for you to qualify SMC, all the 4 conditions, 5 conditions needs to be satisfied. If any one also violated, means what? If you're crossing any one of the limit also, you are a non-SMCs. Now understood? For you to be SMC, all the 5 conditions you have to satisfy. You should not be a listed company. You should be an unlisted company. So first condition, you should be a listed company. Second, you should not be a bank, insurance, financial institution. Your turnover should not cross 250 crores. Your borrowing should not cross 50 crores. Should not be the holding and subsidiary of a big company and super big company. If all the 5 conditions satisfy, you're a SMC. Otherwise, you're a non-SMCs. What is the condition? If any of the following points are satisfied, then the company can be classified as non-SMC. Otherwise, it is classified as, I think same point is repeated. Leave it. Condition. Oh, this is from the point of view of a non-SMC I gave you. All okay? Okay. Now, if you are a banking or insurance company listed or in process of listing, then you are a non-SMC. You are a non-SMC. If you are a banking or insurance company unlisted, these are all conditions for non-SMCs. Banking and insurance company. If you are a banking and insurance, not company, or let's say company unlisted. Yeah, company but unlisted. So you are a non-SMCs. Companies whose turnover is more than 250 crore. You are a non-SMC. If anyone also triggered, you are a non-SMCs. If anyone also triggered, you are a non-SMC. Companies whose debt is more than 50 crores. You are a non-SMC. Or you are a holding company or a subsidiary company of a big company. Then you are a still big company. Now, in our example, turnover of the company is 2.6 crores. Turnover of the company is 2.6 crores. Borrowing is 0.52 crores. KV Limited is neither a listed company, nor a banking or insurance company, nor the turnover is more than 250 crores, nor borrowing is more than 50 crores, nor it's a holding or subsidiary of a non-SMC company. So therefore, the contention of the senior finance manager is incorrect. And that KV Limited is a non-SMC. So KV Limited will be called as a non-SMC rather than...
It is not a non-SMC.
See, it's not, sorry. And that KV Limited is not a non-SMC, rather it is a SMC. I can do one thing. The conclusion is from the SMC point of view. No? What I'll do is I'll change the answer from SMC's point of view. I'll just change this answer and give. I'll tell that as per Companies Accounting Standard Rule 2021, if all the following conditions are qualified, you are a SMC. If any one condition also not satisfied, you are a non-SMC. And I'll put the SMC ka condition and give you. That will become more easy for you. I'll change the answer and give it accordingly. Any problem? Hence, all the AS need not be made applicable because it is a non-SMC. It is entitled for following exemptions. You have to quote the exemptions also. What is exemption? AS 3, 17, 20 fully exempted. Partial exemption AS 15. Disclosure exemptions 19, 28, 29. And event-based disclosure. Event-based exemption is 21, 23, 27 and 25. 21, 23, 27 is about consolidation. 25 something else. Any problem? Any problem here? No problem? Okay. Again, I'm repeating. For you to become an SMC, all the 5 conditions should be satisfied. First condition that you have to satisfy is that you should be unlisted company. Plus, you should not be a banking company, finance company, or insurance company. Plus, your turnover should be up to 250 crore only. It should not be beyond 250 crores. It should be up to 250 crores only. Plus, your borrowing should be up to 50 crore only. And you should not be the holding and subsidiary company of the big company. All 5 you have to satisfy. So, only then you'll be called as a SMC. So, here the word is not or, it is and. Companies whose securities are not listed. So, all unlisted company and companies which are not bank, FI and insurance company. And your turnover should be up to 250 crore. Your borrowing should be up to 50 crore. And you should not be the holding or the subsidiary company of the big company. If all these 5 conditions satisfy your SMC, if any one is violated, first 4 satisfied, but 5th not satisfied, you are subsidiary of a big company. If you're holding of a big company, 1 also not satisfied, you're a non-SMC. First condition, second condition, third condition, 5th condition satisfied, 4th condition not satisfied. Your borrowing is more than 50 crore. So you are a non-SMC. Now able to understand? For you to be SMC, all the 5 conditions together you have to satisfy. If anyone not satisfied, your big company which is non-SMC. Okay, not okay. Online people.
Okay, sir.
Okay, sir. Okay, sir.
Next. Now, two important points I have to discuss from here. With this, we'll wind up. We'll take 40 minutes more. So for 2 points, 40 minutes are very important. We have question based on this in ICA module. Class is till 2:30, na? 10 to 2. We start at 10:30. So 2:30. KV Limited furnishes the following information. KV Limited furnishes the following information. Wants to classify itself as SMC. It wants to classify itself as SMC and avail exemption from year 2 onwards. Question Purinda. KV Limited gave you the following information. They say that I want to classify myself as SMC from year 2. What data they're giving? In year 1, they are non-SMCs. Means what? Either the turnover is more, borrowing is more, or their banking, something. Bank I can't say because it is not banking. Maybe let's say turnover is more or borrowing was more in year 1. So by that virtue, you classify that as non-SMC. Non-SMC means what? All AS you have to follow. No exemption will be given. No exemption. Now in year 2, borrowing reduced, turnover reduced. All 5 conditions satisfied. SMC, SMC, SMC only. But you still have to follow all AS with no exemption. For 2, so even though in the second year and the third year they are not non-SMC, they are SMC. Even though they are SMC, in year 2 and year 3, they have to continuously for 2 years, they have to be SMC and they have to follow all the AS. Then what is the purpose of SMC, sir? SMC means what? Exemption, small boy exemption. You will get exemption when? After 2 years of continuously being SMC. Which means year 4, if you're SMC, no. From now, year 4 onwards, you will start getting exemptions. Am I loud and clear? One more time, sir. Listen to this theory. For a non-SMC company in year 1 subsequently becomes SMC in year 2, 3, 4. If desiring to avail exemption in AS, if they want AS ka exemption, then they have to remain SMC with no exemption for 2 consecutive years. I was non-SMC earlier. I want to become SMC to avail exemption. For me to become SMC to avail exemption, I have to be SMC without exemption for 2 years. So here, first year non-SMC. So AS with no exemption. AS with no exemption. Second year SMC. But I have to follow all AS again with no exemption. Third year SMC. AS with no exemption. Like that, for 2 years you should be AS with no exemption. Then only after 2 consecutive years, the third year is there, no? That time you will become SMC with exemptions. Am I loud and clear? Sir, is this your own question or is it given in textbook? So here we give the criteria for SMC, non-SMC. Then we have general instructions. Page number 3.19. Please take page number 3.19. There's a note in the new book. The note is in page number 3.20. In the book 3.21. Take the note. An existing company which was previously not a SMC means what? big company. Big company means all AS and subsequently becomes a SMC. Subsequently become SMC. In year one, what were we?
Non-SMC.
Non-SMC means what? Big company means all AS we complied with. Subsequently means what? Year two, I became SMC. Small company.
No AS.
Shall not be qualified for exemption. Shall not be given any relaxation in the AS, which means what? Again, all AS I have to follow. Until when? Until the company remains SMC for 2 consecutive accounting period. Means in year 2 and year 3, they have to continue to become SMC. And all AS they have to comply. Then only we'll believe that you are a small company. Because you were initially big company. Big company means what? You have a lot of responsibility. Elder son, elder daughter in the family has big responsibility. So all of a sudden, if you say, no, I want to take the small responsibility, we will not trust. So even though you're a small company, we want you to comply with all AS. We want you to comply with all the AS because once you are big, no. So you have to comply with all the AS. Only after 2 years of becoming small and complying all the AS, we will feel that, okay, you're actually small. Then from year 4 onwards, we will give you exemptions. Year 4 onwards, we'll give you exemptions. Any problem? We have question based on this also. We have practical question based on this also. This is the area where they can target you. Any problem? Online people, any problem?
No, sir.
Therefore, in the above case, KV Limited has to remain SMC with no exemption in year 2 and year 3 so that they can avail exemption in year 4 by still being a SMC. Now, additional scenarios. Year 1 non-SMC means no exemption. Year 2 SMC, no exemption. Year 3 non-SMC, no exemption. Year 4 SMC, can I get exemption? No. For 2 consecutive years, I should be SMC with no exemption. So year 6 onwards, I'll get exemption. Easy? No. There's one more point which I'll not discuss now. Basically, I want to do one practical question for this point. Point number 1.2. Read it silently. What?
Saying that like how before it was SMC, now it is not SMC. So they don't need to revise the previous year values and at the same time they have to disclose that they were in SMC before.
Others, good observation. Understood? Fazil?
Sir, why will they revise, sir?
It's not revise. So I'll just tell you what they're telling. Where a company being an SMC qualified for exemption, I'll just tell it. We'll do it, no problem. Year 1, SMC means what? AS with exemption. What is exemption you got? AS3 not required. Forget that. We'll take example of AS3. AS3 not required. So in year 1, you did not prepare cash flow statement. Year 2, where a company being an SMC which got exemption previously but no longer got exemption in the current accounting period because they became non-SMC. Non-SMC means what? They became big company in year 2. So if they're becoming big company, they became the big company when at the end of the year 1, they become big company. So year 2 onwards, you will follow all AS. All AS. Which means you have to prepare AS3. You have to do AS3. Now, all of you know that as per schedule 3, always we have to show current year data and previous year data. Like that, AS3 also says that when you prepare the cash flow statement format, which we did, you prepare the cash flow statement for 2 years. You give the previous year comparative data also. You give previous year comparative data also. Means what? 31st March of current year, if you give a comparative data of 31st 3 of previous year. Now the problem is current year cash flow statement you prepared. You have given. Now the question is, should I prepare the cash flow statement of previous year and current year? Why? To give the comparatives. To give the comparatives, should I prepare the previous year's cash flow statement? If you prepare, then what is the point of exemption? So law says that, this law says that in case in year 1, you are falling in SMC where AS3 was not required to be prepared, but in year 2, you became non-SMC where you have to prepare AS3, means just give current year figure, previous year figure is not required. Previous year figure is not required. Am I clear? So this is from the point of view of what? Full exemption. Sometimes it's case of partial exemption. So in partial exemption, what happens? You will present a part of the AS15 in the previous year, not full part. So in case of AS15, partial disclosure, current year AS15, full disclosure. Previous year, part disclosure. Should we need to revise this part disclosure to full disclosure? The answer is not required. So in previous year, for AS15, if you give part disclosure, just because in current year you are supposed to give full disclosure by virtue of non-SMC, it doesn't mean that you have to again give full disclosure for the previous year data also. If previous year ka data is exempted, exemption is given, no need to go back and work on that in the current year again. Where company being SMC claimed exemption in the previous year, no longer getting exemption in the current period. Why? Because they became non-SMC. The relevant standards become applicable from the current period. So all the As will become applicable from the current year. The figures which is corresponding to the previous year need not be given or need not be revised just because in the current year you have ceased to become SMC. Means what? Just because in current year you became non-SMC, there is no need to give the previous year data. So current year you became non-SMC means what? Current year become a big company. You show all the data of current year. Previous year ka comparison is not required. No need to go and prepare the previous year ka data or no need to go and alter previous year ka data. The fact that the company was SMC in the previous period and that it had availed exemption or relaxation available to SMC should be disclosed in notes accounts. Now, you are preparing the cash flow statement in the current year. Previous year, you are not preparing. Why? Comparatives you are not giving. So, in the financial statement, you have to disclose the fact that to whom? All the stakeholders. Stakeholders, last year we were SMC. We didn't prepare the cash flow statement. Current year, we are non-SMC. We are preparing cash flow statement. But we are not giving comparatives because previous year comparatives is not given because last year being an SMC, I got exemption. So that exemption is carried forward in the current year. I should not or I need not give the previous year comparatives. So therefore, I'm not giving the comparatives like that. You have to give information to the stakeholder. So I'll look into the information. Oh, because or else what happens? Whenever I see a cash flow statement, my expectation is what? My expectation is that I should have 31st March ka current year data and I should have 31st March ka previous year data. I'm a new shareholder. I did not know what happened to you last year. So I'm saying this data is given. This data is not given. So I'm wondering why this data is not given. You have to explain, no. So in the disclosure, you have to tell that, look, boss, current year only we became big company. So I'm preparing what? Current year cash flow statement. But why the corresponding figures are not there? Because previous year I was a small baby. So I was exempted from preparing AS. So last year I did not prepare. Current year I'm not required to prepare AS3 for last year. So therefore, there is no comparatives of the last year. Like that, you have to give a disclosure is what this line is trying to say. Any problem? No, so two important points we have discussed. That is, apart from the limit applicability, we disclosed two information. That is, if the previous year you are non-SMC, big company, all AS were applicable. In current year, SMC, can you get exemption? No. For 2 years, 2 consecutive years, for 2 consecutive back-to-back years, you should be SMC with no exemption. Only the third consecutive year, you will be SMC with exemption. Any problem? The same point is applicable when I do accounting standard for non-corporates. Today we did what? AS for corporates. These 2 points what I discussed now, ditto applicable for non-corporates. And they have question based on that. And we have questions based on that. ICA book ke andar we have questions. Any problem? If you give me 1 more hour, I'll finish off the corporate part also. Sorry, non-corporate part also.
Yes,
Only 1
sir.
hour I'm asking. You are what, sitting and jolly listening? No, my throat only is paining.
Yes, sir. We can complete. Sir.
You have what luxury? You have full luxury. Tell me what. If I want to listen, I listen to sir in class. Or else, eyes open, mind somewhere else, ear somewhere else. You have that luxury. I don't have luxury. No, from 10:30 constantly I'm talking. Throat paining. Continuous focus in class. मैं तेरा नहीं बोला रे. बैठना बहुत आसान है भाई. So despite all that, I'm asking 1 more extra hour. Then you see my motivation, my energy. 1 hour more. I'll finish now.
Yes, sir.
No lunch break. Continuous. You should go and tell your juniors, brothers and sisters, this is how I worked hard and qualified CA. There is no hard work. There's no slogging. Then what story you have, man? Easily if you become CA, then what story do you have to motivate people? This is the challenge, no? This is the challenge, no? 5 minutes break is asking, hurry. After that 1 hour we can take it. Umar gelladi baata. Seri, okay, right. Okay, leave. No problem. No. Andra. அழுதுட்டாங்க தண்ணி வேற தான் மிச்சம் விட்டுறலாம் okay, right. Today is what, Sunday?
Yes.
Monday, Tuesday, Wednesday. We have a class on Wednesday, is it? Monday, Tuesday, I not keep the class. Matthias na prepare பண்ணோம்ல. Wednesday we'll have same time 10 to 2. So I think 1.5 hours given. I'll finish the remaining part of this chapter. Wednesday itself we can start with AS9, new chapter.
Sir, test irukku sir.
College
Tomorrow, sir.
I told you Monday to Friday I'll have 2 class. You guys have to take OD. There is no chance. Take OD. Next class
Sir,
is Wednesday, Friday, 2 classes we have. Yes.
Sir, Wednesday test irukku sir.
அதெல்லாம் தெரியாது கண்ணா. என் கிளாஸ் இருக்கு 10 to 2 அவ்வளவுதான்.
Sir, tax test irukku sir.
Tax test is evening. Morning is my class, no? Oh, like that. Okay, wait. You want test or class?
Class, sir.
Test or class?
Class.
Seri. Okay. Listen to me. Listen. I have an idea. Give me 1 day of time. I'll tell you by today or tomorrow maximum that will you have test in the morning or evening. If test is there in the evening, morning 10 to 2 class. After lunch break, test will be there. If not, we'll plan the original schedule. We'll go with the original schedule, which is 10 to 11:30. Or no, what is it? 9:30 to 10:30 test. 11 to 2 accounts class. Okay. That I'll tell you by tomorrow maximum. Any problem? Yeah, ma Guru Bagra. Tax test liklama. We'll wind up. Chalo. That's all from my side for this session, people. I'll see you all in the next class, which is on Wednesday. Until then, bye bye. See you. Take care.
Thank you, sir.
Thank you.
Thank you, sir.